Hello and welcome everybody to this week's Gold and Silver Club end of week review. Today is a US non-farm payroll special presented by myself, Phil Carr, and Nick Kelsey at the Gold and Silver Club. We'll be doing a review of the latest developments in the commodities markets. We'll be analysing the week's performance. The live session is going to cover an end of week summary for gold, silver, oil, natural gas and the commodity currencies. We'll be doing a review of the top trades of the week and also covering live market commentary and technical analysis, as well as looking at the week ahead, so key events looking forward. And of course, we'll be covering today's non-farm payroll. So we do a pre-non-farm payroll special today, and we'll take a look at the charts before the major announcement to get you prepped for that. So this week has been a very interesting week for gold. So we're going to move on to the technicals very shortly, and I will talk you through, we've had some really nice trades. Yesterday we especially got some nice trade setups. I'll talk you through what to expect moving forward and the correlations that we're looking at, and we'll take a look at that too. So first of all, let's just go through some fundamentals, the news. We'll just cover that in terms of what has occurred this week. So gold price yesterday actually fell to 3-week lows on a strong US dollar. Gold prices ended the US trading session solidly lower on Thursday and hit a 3-week low as the US dollar strengthened on upbeat US economic data. So on Thursday's report showed the US GDP for the third quarter increased to the fastest pace since the beginning of last year against expectations of a slowdown, mainly boosted by soaring housing sector and a greater contribution from overseas trade. The Department of Commerce said the GDP in the third quarter rose by an analysed 2.8%, which compares to forecast of a 2% expansion. So the economy grew 2.5% in the previous 3-month period. The rapid growth of the residential real estate sector during the summer was among the main drivers of the economy in the third quarter. Spending on housing accelerated to the highest level this year, with residential investment up 14.6% after a similar increase the previous period. And also the initial jobless claims came out higher by 1,000 compared to the expected figure of 335,000 in the last week, which lifted the US dollar on Thursday. We'll take a look at that shortly. Traders are now focusing on the much anticipated US non-farm payroll today. So it's going to be due out in 2.5 hours time for further clues on when the FOMC could begin to taper its $85 billion per month asset purchasing program. So looking ahead, the big question will be how the US non-farm payroll report affect the precious metal prices today and the US dollar. So we will take a look at that very shortly too. So just before we do that, a little bit about myself and the Gold and Silver Club. I'm Phil Carr, professional trader, trainer and speaker. If it's your first time on one of our webinars, welcome, and I can see a lot of familiar faces, so welcome back to those who regularly are on these calls. So I am the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil, natural gas and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club's trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me at the Gold and Silver Club is Nick Kelsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that give any individual the definitive edge to trade in any economy, and also regularly writes for a number of global business and financial publications. And we both appeared frequently on financial television. So that, just a little bit of background on the Gold and Silver Club. So just looking across to the price of gold right now, it's trading just below the, just around the weekly support actually, of $1,308 per ounce. So we will take a look at that. We are near the weekly lows here, so we'll be taking a look at the gold technicals very shortly for you. In terms of gold seasonality, which is definitely noteworthy at the moment, With the festival Diwali, essentially, which occurred on Sunday in India, typically we do see some bullish moves to consolidation at the beginning of November, which we have seen. However, mid-November, we, seasonality-wise, looking at that chart there, we do expect some sort of move lower, and the technicals do seem to be signifying this as well. So we do expect an end-of-year rally to occur from mid-November onwards into December, which will be similar to what you tend to see in the indices. You see a Santa rally, which typically occurs after Thanksgiving in America, so from the 28th of November onwards. But do be aware for your gold trades at the moment that typically middle of the month in November is bearish for gold in terms of seasonality. So we will be watching out for this. The technicals aren't looking that good for gold. It's going to depend today on the US dollar index. We had a really nice sell short yesterday. We came down to spike down 12.96 after we had some entries at 13.22. And at the moment, we're hovering back really right at the weekly support. So that looks primed to be broken at the moment. So we'll take a look at that. It will depend on the non-farm payroll data. But seasonality-wise, bearish moving into next week. We don't know if the fall is going to occur later, though. It might be that we get a spike on non-farm payroll, which is positive for gold, a spike lower in US dollar index, positive for gold, and we don't see the sell-off till next week, or we could get this big sell-off today. So just be mindful of that with gold. And as always, gold is great for day trading. Not as good, really. It's not really your buy and hold market gold. It's much more profitable to be day trading gold. The average volatility is over 300 pips or points per day. So gold very much a day trader's market. US dollar index. So I've just taken this screenshot. This morning we can see here US dollar index had a big surge yesterday, and it's given back a lot of its gains. Actually got a nice big inverse hammer on the daily. I'll show you some correlation too with US dollar index and gold. We do some overlays on the charts. You can just see how gold is inversely correlated to the US dollar index. So we do need to keep an eye on the US dollar index today, particularly with the data which is going to come out at 1:30 London time, or in the next 2.5 hours for non-farm payroll. So we'll take a look at the correlation shortly too. We'll just move across to our top trades of the week, and then we will have a look at the technicals. So top trades of the week using the Gold and Silver Club signature trading strategy. Okay, first of all, we have New Zealand US dollar. So this is a trade that we hit our profit target earlier on this week. We've actually got New Zealand US dollar that was entered on the 31st of October last week, but we hit our profit target this week. That was a nice swing trade. New Zealand US dollar and the commodity currencies in general, Australian US dollar, and also USD CAD tend to be better suited for swing trading than the commodities such as oil, natural gas, WCI, oil, Brent, gold, very much so are great day trading markets. So this was a swing trade, New Zealand US dollar. We had a really nice setup on the weekly as well as the daily, broke through some Fibonacci levels, came up here and hit our target, 110 pips. Entry on that was 0.8287, exit 0.8397. The risk on that, 46 pips, so $460 for each lot traded for 110 pips profit, so $1,100 profit for each lot for a 2-to-1 on New Zealand US dollar. Gold this week, this was just a quick day trade, 4-hour time frame on Tuesday. We had a nice hammer set up at the key level of support. 1306 for the price is sitting again right now. Has been quite an important level of support this week. We've seen consolidation between 1306 up to 1325. So that offered a good risk to reward there at $1,312 an ounce. And we got confirmation spiked up to 1,321 Fibonacci level. So it was very quick in and out there. So 60 point risk, $600 risk for 90 points, 900 US dollars profit for each lot traded for a 1.5 to 1, but very quick trade overnight there on gold on Tuesday evening. WTI has given us more. The oils have been very good to us again this week. We've had some really nice trades. This was again a 4-hour time frame trade there. Came off a level of resistance, Fibonacci level, produced a nice inverse hammer set up there. 105.92 was our entry. Came down to 104.84 support, 108 points profit, 46 pips risk there, so $468 for 108 points, so $1,080 US profit for a 2-to-1 But again, very quick day trade. The great thing about oil is that you hit your profit targets very quickly, so you're typically in and out within a few hours, so it really moves. This was yesterday's trade on gold, which was really nice. So what happened yesterday, the ECB, the interest rate cut, we saw initially a spike up with gold. However, for those of you who are savvy to the correlation, the Euro USD absolutely tanked on that announcement, and there's a strong correlation with Euro USD and also gold. So that didn't quite work out. So the Euro USD was absolutely tanking. Gold initially spiked, hit 1325 Fibonacci level, couldn't get above it, and suddenly the sellers started to come in. We had an opportunity to get in, very tight risk to reward there, $1,322, and then it just absolutely moved. Then we had the US dollar come out, US data come out 45 minutes later with the unemployment claims, which just helped our trade along here, and we came down, hit our profit. 1,297 was the price on gold there. So it was nice, quick trade, in and out within an hour. 250 points was the profit on that. So 50 points risk, $500 risk for 250 points, $2,500 profit, 5-1. And we're pleased that several of our gold and silver club traders got that as well. You had to be fast in and out of that trade, but it was predictable due to the Euro USD smash that we saw and the correlation. So we had a really nice trade there yesterday, 5-1 on gold, just in and out within 1 hour. And natural gas actually produced a really nice trade. It came up, tested the key Fibonacci level just under its 50-day moving average. The natural gas inventories which came out gave us further confirmation, and on the 4 hour we had confirmation of a tweezer set up there as well. And we broke our entry there, 3.609, came out at 3.516, 93 profits, 93 points profit just in the afternoon yesterday. 30 points was the risk, so each lot traded $300 for 93 points profit for $930 profit for a 3-1. So we've had a lot of opportunities this week, a lot of day trade opportunities yesterday. We actually had more trades than this. We had silver trades on, New Zealand US dollar trades on, USD CAD trades on, but just want to give you the top trades of the week. But yesterday was just fantastic for day trading. It was just the day trader's dream yesterday. Everything kind of just started to go like dominoes after the announcements came through from the ECB and then the unemployment claims. So we'll talk you through very shortly all of our charting as well. Okay, so we're just going to move on, and we're going to just have a look at some live technical analysis now as well. Oh, actually, this is WTI. That's just before I do that, WTI oil as well. Yesterday, we broke through a level of support we've been monitoring all week here, the 105 level, and this actually came down really well. This was just a break down to the 103.82 level. We actually broke through on Wednesday evening. We got triggered. And yesterday afternoon is where we hit our profit target, 103.82. Perfectly actually hit the Fibonacci level, 117 points profit for a 52 point risk there. $520 risk for each lot, traded for $1,170 profit. So that was a really nice sell short on Brent. You could have traded that through WTI too, because that tanked yesterday afternoon as well. They're both looking interesting right now at the moment, WTI and Brent. We're going to see if they're going to start to bottom out from here. So we'll take a look at the charts very shortly for you. So let me just do that and switch across to my live charts. Okay, bear with me whilst we do this, and we'll take a look at some correlations. Okay, so it should be on gold at the moment. So first thing I want to do, actually, I'm just going to bring up the, let's have a look at the US dollar index here. Okay, so I've just got an overlay of the US dollar index to my right here, and this is gold with the black lines here. So you can see essentially these two are inversely correlated much of the time. So we saw yesterday we got a big spike up on it's come down now, but we got a big spike up on the US dollar index, which then produced this move lower in gold. So at the moment we have a doji on the daily time frame for the US dollar index. So there's indecision in the market ahead of non-farm payroll to be expected, and gold sitting on this level of support around the 1307 level right now. If I take that, one thing to bear in mind this week and last week as well is that we did manage on the FOMC last week. We held this very important level for the US dollar index, the 79 level, which caused this big move lower for gold. So you can see there when we bottomed out, that was where gold was at its peak. And then as we started to rise in the US dollar index, this is where gold has been weakening. So US dollar index, very important. Its inverse correlation to gold at the moment. So if we put that on the 4 hour, I can probably show it to you just in more detail here. So you see, this is the spike that we got yesterday and the subsequent move lower in gold. And you can see each time we've essentially spiked up here, it's come down on US dollar index, then we've spiked up on gold and vice versa. So you definitely want to be watching the US dollar index tomorrow as well. I will actually just show you because I think it's worth showing you just on the 4 hour time frame here as well. This is the euro US dollar, okay, and let's just overlay that with gold for you, and I'll just show you what happened yesterday after, because the euro US dollar gave the sort of nod first of all. So this was the correlation yesterday with the euro US dollar. So euro US dollar did actually fall first. We saw these big moves lower, and that just dragged gold right down. We saw an initial spike on gold, and it's dragged it right down. So you can see how strongly correlated gold here is to the euro as well. So euro news is important for gold, does impact it, and that will help you a lot with your gold trading. If you're gold trading, you need to take advantage. You need to be aware of the correlations you get with US dollar index, with euro, with other markets too. Okay, so with that, that's the correlations. So do pay attention to that today when you're trading non-farm payroll, because the US dollar index is going to lead the way in terms of whether gold's going to break support here or find it's going to rally. So you can see we've settled right on 1306 at the moment. So that's the key Fibonacci level at the moment. If we break that again today, we're probably likely to come down, and we're going to come down and retest around. We retest 1297 yesterday was the low. We would be looking at support around 1296 to 1294 area as profit targets for sell shorts from here. So selling short or a break of about 1305 down to around 1295 is going to offer you around about 100 points if that is the move that we're going to get. If we get a lot of pressure on gold below, if we start breaking 1294 level, 1290s, we've probably not really got a lot of support down here until we get to about 1277 level. So those are the key levels to be looking at. On the upside here, if we do get a surge in the US dollar index gets hammered today, we could see we really need to break above the 1326 levels. You can see yesterday we surged up, couldn't get through 1,325, and that was where we put our sell orders in. But we really need to break above about 1327 here for a nice move higher up to about 1,335. It's got some work to do at the moment, gold, and you can see all key moving averages are turning lower now on gold. And if I bring your attention to gold just without any Fibonacci, just a very clear trend line here. I'll zoom this out for you so you can see this is the trend line on gold, which has been in play for over a year, since August 2012. So coming on almost to about 14 months now, there's this downtrend in gold. So gold looks like it wants to go lower from here. We may then find some support around the 1250s and so on, but technically it's not looking good for gold right now. However, it is a very much a news-driven market, gold, at the moment. So I wouldn't be putting any orders in until I get confirmation as to what's going to happen with the news today. So I'll be waiting for non-farm payroll and then doing these trades, instant execution or pending orders after the news has occurred. So that's what we'll be looking at. On the 4 hour time frame, looking very interesting. So this is where we surged up yesterday, 1325, couldn't break through, sell opportunity, sell orders then came in there, and we had the opportunity to sell short, came down, broke through 1305 support, and then 1296. So 1306, we're back above that support. We're just consolidating here. So what we're going to see really today is going to be a break in either direction. So we're either going to get a break down to the downside, come down, retest 1296, or we're going to get a breakout to the upside, retest 13. Let's have a look. We'll just draw that a little bit more clearly for you. We're going to get a breakout to the upside, and we're going to retest this 1321, 1325 area, and then we want to see if the market can break above these levels. But at the moment, we're consolidating around this support level. So that's going to be important to monitor today for gold. You can see we're just consolidating at the moment, very typical, just prior to a news announcement. Just markets are patient, just waiting to get some news here. I will be monitor it also. Non-farm payroll, gold can sometimes start to move about a minute or so just before the announcement, because some news starts to get leaked to some traders out there. So you might start to see some of the moves occur just a minute beforehand, but we do really want to wait for the news so that you've got the fundamentals to trade off alongside the technicals. Okay, so looking at silver, Silver is a bit of a nightmare actually at the moment in terms of below all these levels of support. Your gold is going to be your best bet for trading this move. We did get a nice sell short yesterday. However, all these blue lines here, they all represent levels where silver can find support. Silver has a lot of work to do. It's got a lot of support below it until we start seeing lower moves. If we can clear through all these levels of support here, which are previous swing lows here, a lot of them, we really need to clear through about 1283 before we can have some clear breaks, and you're going to start seeing stop losses hit, and then we can really start to trade the move lower. If we're going to get a move lower, all moving averages pointing lower as well for silver. Silver's definitely in a downtrend below its key moving averages here. And then I'd like to see some breaks below 1248 here to take it down to 1982 and lower than that. But we've got some work to do on silver. It could find support at any of these levels. Any moves lower at the moment seem to be short, sharp for silver. You're going to be doing instant execution, sell, and getting out quickly because the moves are quickly bought at the moment. Sort of bargain hunters at the moment. And remember, moving into probably mid-November, through to the end of the year, through to beginning of January, we've got a lot of seasonality on the gold bulls and silver bulls' favour. But from now until about mid-November, bearish, usually for silver in terms of, and gold for seasonality. And then we also need to be mindful of the daily technicals, which are all looking pretty bearish from here at the moment. I suspect, actually, looking at gold, let's just look at the weekly as well. Yeah, weekly is a bit of indecision there. We've got a doji on the weekly there. You can see this massive downtrend at the moment. We're in between the middle there. So be mindful of that for gold at the moment. So that's gold and silver. So gold, your best bet rather than silver at the moment in terms of more clearer signals. Moving across to WTI, we've had your trend has really been your friend. WTI more recently, been a lot of opportunities to sell short. However, zooming out on this chart, you want to take note of the trend which has been in play going back to about June 2012. We've got this supportive trend level here for WTI, and we are bouncing, getting very close to hitting the bottom of this trend. So for those of you maybe you trade the indices like the Dow Jones, Dow Jones tends to do this as well. It has some major trend levels which a lot of traders follow, and WTI we're watching to see if we're going to get the same occurrence at the moment. So it's around the 92.75 level at the moment where we are. So we're going to be watching, looking at the weekly, because if you look at the week, depending on how we finish today, we might be finishing on like a dragonfly doji or hammer on the weekly time frame here. And if it bounces off it, it's got a clear support level, 92.75, and clear trend lines. We could be in for a short term, have a bottom on the market here for WTI. But we want confirmation. We haven't got that confirmation yet. We break through trend lines and horizontals, fair enough, we'll short. And we are still below a lot of key moving averages. But at the moment, on the daily here, we did get an inside candle yesterday, so we'll be looking to see if we're going to break really above yesterday's lows of 93.70 or above yesterday's highs, 95.20. But in between that, I'll just watch out. Don't want to get chopped up during it, non-farm payroll. So watch for either big breaks of the lows or the highs here. I'm mindful that if we do come down and hit 92.75, probably going to get some potential support there based on this trend line and important horizontal. Okay, so moving across to Brent. Brent actually, so this is where we came down, hit our key profit target. Actually, yesterday, 103.72 was a profit. So you might have thought, oh, there's not much more downside left in this market, but we did actually have the move that we'd anticipated. If we were to break lower today, break below yesterday's, break today's lows really on negative news, we would see 101.54 as the next horizontal level of support here. So that's what I'll be watching out for. But also, I'll be looking at this more on the 4 hour as well, just monitoring Brent to see what if we're going to break out and if we're going to start to break out of this consolidation here. But no real clear moves here. We've had really a good time selling short Brent at the moment. We're just waiting for further market direction today on non-farm payroll. I'd say WTI is giving more clearer potential setups at the moment than Brent. But I'll be very interested to see if Brent's going to hold these key levels of support next week. With that, let's actually let's bring across natural gas, because we've had some really nice trades on natural gas recently too. So natural gas, you can see here natural gas that we've actually, we came up yesterday, we spiked, we found resistance at 50-day moving average and just below 3.628. resistance there. We also had on the 4-hour time frame, we had that nice, it was real-time instant execution. We had a nice tweezer set up there on the 4-hour there as well. But on the daily, also confirmed by natural gas storage, we got a really nice 90-point sell short. We are starting to get higher lows here and higher highs on natural gas. It does seem to be wanting to go higher. In terms of seasonality, natural gas, getting into November, December, January, the winter months, is going to be more demand for natural gas. Seasonality-wise, you do tend to see natural gas will be more demand, and the price does tend to go up. We also had this big gap. We've been selling short last week on a break of some key fib levels here. We got a big gap down on the market on Sunday, produced a hammer on the daily, and we were looking to see if we're going to fill the gap. We did actually fill that gap. It was quite a nice gap fill there, about 60 pips, and you can see where the market, from filling that gap, has actually then rallied. And we are, at the moment, we're looking more on the bullish side at the moment for natural gas. That does also correlate with USD Canadian dollar, which got a lift yesterday as well because of their massive energy sector out there. They are quite strongly correlated to natural gas. So we'll be looking to see how the market's going to react if it comes back up to 3.586 fib, and especially up to this trend line here, 3.628 at the moment. No real clear setups yesterday. We've already made our money really on natural gas this week, selling and buying, but we will monitor to see what setups we're going to get moving into next week. Looking at the weekly, you can see there where we have bounced off a major trend line. We're starting to form a bit of a wedge here as well. So one to monitor at the moment. Okay, and then finally, let's take a look at the commodity currency. So broken down, New Zealand US dollar gave us a nice sell short signal on Wednesday with this nice inverse hammer at Fibonacci level, came down, and we delivered there something was circa about 60 pips or so. It's down to just below the Fibonacci, roughly 50 pips from confirmation from that break of yesterday's inverse hammer there. And we're just getting a little bit of consolidation at the moment, just prior to the announcement. So just everybody's really waiting for the non-farm payroll figures to come out here on the New Zealand US dollar. So inverse hammer on the daily, looking a bit weak, starting to the moving averages here. It's round the cluster of moving averages. I think if we start to see a breakdown with New Zealand US dollar, we want to see if we're going to break through yesterday's lows and get a break through these Fibonacci's here, 0.82959, being a key Fibonacci level to break here, which is where we had previous support. So if we start getting a breakdown and we start breaking through also 0.826, we could get a further move lower here back towards the next level of support, 0.81768. No real clear setups on that. The setup was really from Wednesday. No clear setups on that at the moment, but we'll see how the market reacts to non-farm payroll. Just looking at Australian US dollar, so that also correlated very strongly with New Zealand US dollar, sold off heavily yesterday as well. Nice inside candle set up there on the daily. And we just come shy of a Fibonacci level, 0.9409 and a 50 moving average. So we'll see how the market reacts. It's now below a lot of key moving averages, finding resistance at those moving averages. So looks more bearish to me, certainly more bearish than bullish at the moment. If gold gets taken down today, expect the same for Australian US dollar and New Zealand US dollar. So we'll be looking at a break of 0.94092 and see how the market responds to this 50-day moving average on Australian US dollar. Okay, so if we get a breakdown. Finally, the USD Canadian dollar. We talked about this last week. Based on the weekly, we did have an inverse hammer on the weekly at a key Fibonacci level. We've seen some consolidation this week. It's been a bit choppy here on USD CAD. It's provided some nice day trades here, but you can see doji on the daily time frame at the moment. That's obviously waiting for US data to come out this afternoon in order to pick the directions, whether we're going to get a breakout to the upside or to the downside here. But there's no real clear setups here on USD CAD. I definitely think the ones to watch are going to be certainly gold, oil here. Gold definitely going to be the big one before the announcement today. So US dollar index, be watching that very closely. Gold is at some really key levels today. In gold, average volatility of 300 pips each day can definitely be providing you with some nice day trades here. So just looking on the 4-hour here, these are the levels to be monitoring. 1306 where we're finding support. Looking down, breakdowns to 1295 level and breakouts of 1326. So really gold definitely the one to watch today, and also WTI oil, I would say. These are going to be important ones, and also New Zealand US dollar and Australian US dollar, see how they react on the news. So let's, with that, we'll go through the key news today. And for those of you actually, let's just check if you've got any, let's say, there's a couple of questions come through. Let's have a look. Okay, so let's have a look here. So we've got a question. Cheers for the question, Pete. We've got a question from Peter. So let's, I think to answer that question, let's just go back, and bring up the correlations here. So the question here, let's bring up gold for US dollar index. So the question here is, so let's say non-farm payroll is good for the US dollar and the bulls grab and buy. What is the max you think gold will spike to? Okay, let's bring up the US dollar index, shall we? And let's bring up gold. Okay, so the gold is the black line on the chart. The US dollar index is the candlestick chart. Okay, so basically, if the non-farm payroll is good for the US dollar, so what you're going to see is the US dollar will spike, the US dollar will go up, and then basically gold is going to give way. So the 1306 level with gold at the moment is going to give way. Then it's how low are we going to go? So are we going to just find some support around the 1295, those Fibonacci levels, or are we going to break those and see 1277 tested there? We might just get short spike down to around, as we saw yesterday, 1297 level. Might see some buying occur. It does depend. But if the US dollar index spikes, if US data is good, you're going to see the US dollar index go up. So you're not going to see, you're unlikely to see a spike on gold unless it's very temporary. You'll see gold go down. That's the correlation. So if the data for the US dollar is negative and you see US dollar shoot down, you're going to see gold shoot up. So that's going to be the inverse correlation there, to answer your question, Peter. Yeah, no worries, Peter. No, it's good to hear. No problem at all. Okay, so Mr. C, when you put in your pending orders 5 minutes after. To be honest, with something like non-farm payroll, it's more about instant execution. You know, even the banks will be doing instant execution on non-farm payroll with these core news announcements. You don't want to get chopped up with pending orders, you see. So it sounds reasonable. Okay, pending order if it breaks higher, pending order if it breaks lower. That can work on some announcers. Non-farm payroll, you can get chopped up to do that. I would just be going with instant execution orders. Maybe you've got a strategy which will take into account pending orders there. It's going to be more about instant execution. Just be fast. You know, have your deal tickets open, have everything ready in front of you. You've got to respond quickly. I mean, there's some great videos. On actually, Gold and Silver have got some great videos on how to execute very fast with news trading. How fast you need to be. So it's just about being prepared, being prepped, having the deal tickets open, ready to respond, be able to get the news data coming out as fast as possible. And just have the charts in front of you, watch what the US dollar index does, have the gold chart ready, and then trade the move, essentially. Yeah, I mean, depending on your strategy, that there are pending orders that you can put into play there. And yeah, you can set pending orders after the announcement as well, after that's moved. But I'll be wary about sending it any pending orders just before. Okay, great. So let's have a look, guys, at the news which we've got coming out later today, because we've not just got non-farm payroll, actually, we've also got, I believe Ben Bernanke is speaking as well, and we've got the US, Michigan consumer sentiment. So today so a couple of 2 hours time, we've got US non-farm payrolls. That measures the change in the number of people employed during the previous month. So excluding the farming industry, job creation is the foremost indicator of consumer spending and economic activity. So a higher than expected reading should be taken as bullish for the US dollar. They've got more job created. Actually, let me just give you the quick, let's have a look what the expectations are here. So 121k jobs creation is the forecast here. Okay, so if we've got less than that number, it's going to be bearish for the US dollar. If we've got more than that number, it's going to be bullish for the US dollar. If it hits more or less spot on, it's going to be more neutral. Okay, so that's the number. Prediction 121k for today. So moving on to later on this afternoon, then about another hour and a half later, we've got the US Michigan consumer sentiment. Yeah, no problem, Drew. See you later. US Michigan consumer sentiment. The index rates the relative level of current and future economic conditions. There are two versions of this data released 2 weeks apart. Okay, so the preliminary data tends to have a greater impact. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. That's a high impact announcement as well. So with that data, if you're in trades, again, non-farm payroll, You do get big retracements on non-farm payroll. You don't really get it on Federal Reserve announcements. You just get one solid move that continues. With non-farm payroll, you get big spike retracement. So you want to be in, out fairly quickly with non-farm payroll. Get your profits, get out before any big retracements occur. US Federal Chairman Ben Bernanke speaking later as well. So that's at 8:30 p.m. GMT or 3:30 Eastern time. So as head of it, so that's going to affect any positions that you basically, if you want to keep positions over the weekend, swing trades and so on, that could affect those as well. As head of the Federal Reserve, he controls short-term interest rates. Fed Chairman Ben Bernanke has more influence over the US dollar's value than any other person. Traders do closely watch his speeches as they are often used to drop hints regarding future monetary policy. So his comments may cause volatility for the US dollar and commodity prices. So, that could also significantly move gold in US dollar later on today as well, just affecting any swing trades that you might have on. Okay, moving into next week. So next week, for those of you trading crude oil inventories, is important. So this week, the US crude oil inventories came in a little bit lower than expectations, did cause some short-term a bullish move on WTI and Brent on Wednesday afternoon, and then we just saw a continuation of the downtrend. So US crude oil inventories will be next Wednesday, 3:30 GMT, 10:30 a.m. Eastern time. That data reports the number of barrels of crude oil commercial firms have in inventory. Commercial firms, they report their inventory level to the Energy Information Administration on a weekly basis. Higher than expected readings should be taken as bullish for the crude oil, while a lower than expected reading should be taken, higher than expected reading. So if you've got a surplus of inventories, is bearish for crude oil. If the reading comes in as less, that tends to be on the bullish side of crude oil. Then on Thursday, as we had yesterday, you've got US natural gas storage. So the Energy Information Administration, the EIA, they produce natural gas storage report measuring the change in the number of cubic feet of natural gas held in underground storage during the past week. That also affects USD Canadian dollar. So if you trade USD CAD, that will affect that as well. So US, that's a key US indicator, does have impact on the CAD and obviously natural gas too. And then next Friday at 1:30 p.m. GMT, 9:30 p.m. Eastern time, we have the New York Empire State Manufacturing Index. That index rates the relative level of general business conditions in New York. So a level above zero indicates improving conditions, below indicates worsening conditions. That reading is compiled from a survey of about 200 manufacturers in New York State. So higher than expected readings should be taken as bullish for the US dollar. A lower than expected readings should be taken as bearish. That will affect gold too. Okay, excellent. So let's just move across. Okay, so we've got a couple of questions there. So what's the best way to get the news fast? I would recommend a Reuters terminal, but if that, you can find out definitely more about that at the, I'll give you some information if you want to get in touch, just find out more about that. You can get breaking news very fast on a Reuters terminal, but of course you can also go to major news channels, CNBC, Bloomberg, FX Street, Pulse, as well. You'll get all the information you need on FX Street. There'll be webinars today as well on FX Street, just with the live breaking news for the non-farm payroll figures. So you'll probably get the news very fast through that as well. Okay, so for NFP, what US index? No problem, Yusuf. What US index chart? Well, what time frame should you look at? I'd be looking at the daily and 4 hour, switching between the two. The daily, because I want to see if we're going to break through yesterday's highs, and the 4 hour will just give you more information just on the candle setup, so you're going to see, because a lot of traders trade the US dollar index directly too. So I'll be switching between the daily and 4 hour. That's my preferred way of viewing the markets and taking trade setups. Okay, and of course, if you want to take your trading to the next level, would like to find out more about our live trading room program, the Gold and Silver Club Masterclass workshops, find out more about how to join our exclusive Gold and Silver Club international community. We are an international community. We've got traders from all over the world covering all the time zones. So if you do want to find out more about that, you can request more information the Gold and Silver Club live trading room program just at www.jointhegollandsilverclub.com. So you can find out more about that there. You can call us at either our London, New York, Johannesburg offices, so 0207 193 0403, or New York office at +1 646 808 0403, or Johannesburg office at +2 07110838403 to get in touch, or of course email us at office@thegoldandsilverclub.com to find out more about our live trading room program. Okay. And of course, just make sure you subscribe to our newsletter to take advantage. You get free weekly gold, silver, oil, commodity currency news, live market analysis of prices, and also invites to exclusive webinars that we do as well. So you can take advantage of that too. Okay, guys. So with that, I'll just leave those details on the screen for you so you can get in touch if you want to find out more information. Of course, we wish you all luck for today's non-farm payroll. It's only 2 hours away now on FX Street. You'll find out more information about upcoming webinars today as well. And if you, we wish you a great weekend, guys. And do catch us here, same time next week. We'll be back to go over what the post non-farm payroll and key news and analysis for next week too. Okay, guys. So take care. Have a great weekend. We will see you on the next one. Cheers, guys. Bye bye. And thanks to FX Street and the team.